talking, because y'all know I can talk. Okay. Um, Let me speak up a little louder so y'all can hear me. How y'all doing today? This is Anthonyfallin, Tone Setter Financial, and I think this is my first video of the year. I just kind of wanted to sit back and just do some research, listening to some of the experts to formulate, my own thoughts and opinions about what's taking place behind the scenes of this whole coronavirus, all of that. But also just connecting the dots to what I'm doing in Carrot Bars and it versus the market and the global economy as a whole, with the few things that have transpired over the last couple of months, the last couple of days, the market and the high volatility of the market, and how sensitive the market really is. And it's so sensitive because society itself is sensitive. Everything is like PC. You got to watch what you say, or all it takes now is for some well-known figure, president, CEO of a bank, CEO of a major corporation, something like that, post something on Facebook, and if it's negative, it will affect the market. That's how volatile the market is right now. I know that they're saying that the market is doing good. At the same time, it is sensitive because of these so-called bubbles that are surrounding the market itself as a whole. And what I mean by that there are certain, in each sector or branch of the financial market, whether if it's the corporation, whether if it's the retirement, the baby boomers and this retirement crisis that they're talking about, whether it's the QE or QT. QE is quantitative easing. QT is quantitative tightening, which is that they're going to tighten the cash flow that they're dumping into the banks or into the market, put it like that. So QE is when they're dumping money into the banks, into the market, and that is weakening the dollar. That is definitely weakening the dollar. And what it is that the capital is for cheap, or the dollar is for cheap, because when they do QE, which is dumping market, it makes it easy for the rich and wealthy to get their hands on a lot of money to do a lot of things. And what they are doing, along with the banks, is they're getting a hold of that money, that free money that they can get from the reserve and central bank, from the QE, and they're just taking that money by the bags and putting it into the market. And that's why the market seems like it's bulling so hard right now, and it's working. But they're saying, but from experts outside looking in are saying that they're really destroying the dollar, and with the interest rates being reduced. So that's the first news that I was talking about that just recently happened. It's a good way to segue into this whole subject matter of a few pointers that I'm going to talk about on this video. So the first one, like I said, is the Federal Reserve have reduced interest rates even more. So we're pretty much at a negative zero in interest rates for the most part. That's not good. That's not good, because they wasn't supposed to. They said they couldn't go any lower than the rates that they had previously cut, and they have dropped it a few points lower. So that's also weakening the dollar as well with the interest rates. So and the reason why I'm saying this is I want y'all to look this up for yourself and read the article. You can look it up. Along with that, because these two are coupled together, they also said that they are in a emergency monetary policy plan. So, and with that, and what they also said was that if the market looked like it was about to go into another recession, they would just do another QE. Now let me come back some, because I mentioned QE right before I segue into these two topics that are coupled together. From September 2019 to January 1st, 2020, the Federal Reserve has been dumping liquidity, which is cash, into the banks, because the banks have not been able to have money for the next day, or to pay each other, to transact amongst each other back and forth, to have money in the banks for the next day. So they were supposed to do that for like maybe 2 months. So, but right before it was supposed to end, they ended up extending it until the beginning of 2020, and it just ended like, I think sometime maybe the top of February. But now they went into quantitative tightening. So so if it's not a problem, why would they have to tighten things up? Or maybe the tightening is just because the QE came to an end. So now they're slowing up the cash flow because they have printed enough money for it to circulate, not just within the nation, but also globally as well. To circulate new money out there in the market. So therefore, but I've already told you what's taking place is that people are dumping money back into stocks. They're just buying up stocks. They're not putting money back into the market for the consumers, for us, for everyday average people. It's not for us, because really that's what they should be doing. That's what they should have done. And matter of fact, I'm gonna have to pull that article up when we had that bubble with the with the prime sublending in the housing market in 2008, 2009, and when Lehman Brothers was about to go under, and Goldman Sachs and all those Wall Street investment banking firms asked for money. They was deciding, that Congress and or government was deciding if they should put the QE into the hands of the people or into the hands of corporate Wall Street, and they ended up bailing out the banks. Remember that, okay? I know y'all remember that, for those who really pay attention. But if you don't know, you can go back, check this fact. You can fact check this right now. And that was something that this has happened before. Just to drop a little nugget in history, when after World War I or II, and I talked about this in one of my previous videos, as a matter of fact. But Germany, after they lost the war, they went into hyperinflation. They went into debt by the quintillions, and because they had to pay back all of the countries that participated in defeating them. So they had to. So since they went into hyperinflation, instead of them dumping money into liquidity into the market, they gave the money to the people, because the people are the consumers. The consumers go out to the stores and consume, shop, do whatever they do, and that allows the new money that's been liquidated to them to circulate in their economy. Okay, so it just transferred like it always do. The wealth transfers. We get money, the consumers get the money, consumers spend with, big corporations and small businesses spend with larger corporations like warehouses, distribution, to get their supplies and product and whatnot, and then it goes back into the banks as well from all three levels. So that's how they started to regain and stabilize their economy. All right. Besides the goal that that everybody held at the same time, that was in the hands of everyday people, those who had the gold. So that's just a little history. Okay. So the second part was the emergency monetary policy plan, and like I said, they said that they would just do QE if it looked like everything was going to a recession. They would just dump more money into the market. Why? Is because the United States is the world reserve currency, and they can print as much money as they like. They are the dominant they are the main currency. Even though the euro is stronger than the dollar right now, only by a few dollars, or only by $1, $2, $3, I think, something like that. They are, but still, the US dollar is the world reserve, is the dominant currency until it's not anymore, and that's could be probable. I mean, I can't say when or whatnot, but it can be, because all paper currency goes back to zero until another currency arrives. Okay, so and I'm saving my last part, this part right here, because I might really talk about. I'm really gonna go in on this, somewhat. But this is all. Go check it out for yourself. I'm just here to bring some understanding and just providing you with information to lead you to go look for yourself. Because y'all know that I'm into Karatbars International, which is about saving some of your paper money in gold. You can open up your free gold savings account. But anyway, I'm not here to talk about the company, but I am promoting it just off that right there. But anyway. Germany has just announced by the BaFin. BaFin is like the regulators of the financial market in Germany. Okay, BaFin, BaFin. You can check that out. That article that they have legalized Bitcoin as a financial currency, even though it's not regulated by the SEC and the banking, regulations, all that stuff, that their Federal Reserve, central bank or whatnot. It's not regulated by the central bank there, or any financial institute of the BaFin. Okay, but they're recognizing it as currency, so it could be a medium of exchange or traded as such. Okay, and then on top of that, India has lifted the ban off cryptocurrency trading, so that's huge for the crypto space. For those in Karatbars, we do have our KBC coin. That's about the new KBC coin that's about to hit the market in a matter of time now. It's just when Dr. Harold Seiss, CEO and founder of Karatbars, and the team decides to pull the trigger to make that happen, and they're doing that right now. For some of y'all that got the video, the team, you got the video. Some of the prospects got the video. Y'all saw the latest news. Okay, so I got to get to this because I got a few more minutes. So with that taking place, the dot connecting I have here is Brexit versus EU. Brexit is British exiting the EU. The EU is the European Union, right? Okay, and the top countries in the EU is British, is the Brits, Germany, Italy, and Spain. You know what I'm saying? Or if it wasn't the British, it would be called the United UK. But the British are trying to separate from the European Union because they control that. Because if you don't know that London and Britain is a what's it called, an empire city. You know, it's a city state. Like it had its own, pretty much it's its own state within that city. You know, city of London. I'm trying to explain that best as I can. There's only 3 that's known like that. Really, it's 4. But it's Washington D.C., the Vatican, and London. You know, empire cities, empire state cities, or something, something like that. Empire city states, yeah, empire city states. That's the word I was looking. That's the term I was looking for. Check that out. But anyway, why is that a huge deal? Why? Because if Britain separates itself from the EU, right, that puts a financial strain on the rest of the countries, and they may or may not be able to handle that financial load, because you have one of the dominant countries separating itself from the union, and then all of the other countries, that all of the main countries will have to support the rest of the countries that are in the EU. When we're talking about Ireland and we talk about Ireland, I can't think. What's the Persia and everybody that's in the EU, all the smaller countries and stuff like that. Okay, because I'm not gonna hold y'all up, but that's the interesting part with all of that taking place, because Italy itself is in a slight recession, and some other countries of the other smaller countries are on the fringe as well of facing a recession. See, no, but they're not talking about that in the news, you know. So with Germany front running and legalizing Bitcoin is an avenue for them to explore an alternative currency that can be used. And if Bitcoin can be used in Germany, just like the KBC and Karatbars is at the hotel, I think it was the Prestoria, some prestigious hotel, where the hotel uses K Merchant, you know what I'm saying, which is part of one of the programs that's within our ecosystem, you know, that allows businesses to be linked to the Karatbars ecosystem. Okay, and so that's proven data for one thing, and the proven data of Bitcoin, because of its popularity and its first of its kind, that opens up a gate, which is good for the crypto space in general. So we're looking at how things are going to unfold, because this is the first country that has announced, to my knowledge, that has announced that Bitcoin can be used as a medium of exchange. That's not verbatim, but that's pretty much what it is. So it has it's going to cause Bitcoin to be considered seriously, because now it's solidifying or becoming an asset for real, not a speculative asset, because Bitcoin doesn't have anything, no asset, a sound asset backing it, such as gold or any type of property or something of value. It don't have to be gold. It could be silver. It might be platinum or palladium. I would advise you to especially look into not just gold, silver, but platinum and palladium. If you can find, you find out where you can invest your money into those two precious metals right there. So that's a little stock tip. The other thing is with the India banning crypto, allowing it to trade. So therefore, you can start to see how this can really unfold right before our eyes, with this whole crypto space, and that looks good for us and those affiliates that are within the Karatbars, those members, such as myself. So I just kind of wanted to put this information out here just to kind of help everybody think, provoke thought. Maybe you want to come back and ask some questions, or maybe you want to know more about Karatbars. But this is just my thoughts and my opinions, along with some research and mixed with others as well. And I'm just connecting what I see happening, because I look at trends, and I see something trending right here that's huge and is not being reported. That is so huge, and it's not being reported. That's when you really have to start looking into it and start thinking twice about what we're doing over here in Karatbars, and how this all can really play a huge part into what we're doing. And I think you really start taking it serious. For those that know about Karatbars, that has been prospected by myself, referred by myself, to take a look at what we're doing over here. That's the only thing that I can ask, is for you to just take a look and make a sound decision for yourself. Because I'm just keeping it basic. There's a lot more that I have in mind when it comes to this. So I just want to leave off in that note. This is Anthonyfallin, Tone Setter Sports Channel. Peace. I'm out.